SoFi Technologies. You've probably heard the name, maybe you've even seen their ads, but do you really know what SoFi is all about? And more importantly, should you consider adding their stock to your portfolio? SoFi is a leading player in the exciting world of fintech. They're not your typical bank. Instead, they're leveraging technology to shake things up, offering a wide range of financial products all in one convenient digital platform. Think banking, lending, investing, you name it, SoFi likely has it. What's really caught the eye of investors is SoFi's impressive growth. Their stock is up significantly this year. User numbers are skyrocketing, revenue and profits are going through the roof. It's enough to make any investor take notice. But before you jump on the SoFi bandwagon, it's essential to understand the full picture. In this analysis, we'll delve into SoFi's business model, explore their potential for continued growth, and examine the risks involved. By the end, you'll have the insights you need to decide if SoFi stock deserves a place in your investment strategy. SoFi started with a specific focused student loan refinancing. They saw an opportunity to help graduates tackle their student debt burden with more favorable terms, and it worked. They quickly gained traction, attracting a loyal customer base. But SoFi didn't stop there. They had bigger ambitions. They envisioned a future where they could become a one-stop shop for all things finance. So, they expanded their offerings aggressively, venturing into personal loans, mortgages, and even a robust investing platform. This strategic shift was a game changer. By diversifying their product portfolio, SoFi tapped into a much wider customer base. No longer were they limited to just recent graduates. They now had something to offer everyone, from seasoned investors to those just starting their financial journey. This evolution from a niche player to a full-fledged financial powerhouse is what makes SoFi's story so compelling. They're not just competing with traditional banks anymore. They're aiming to redefine the entire financial landscape, all through the power of technology. SoFi isn't content with simply replicating what traditional banks do. They're on a mission to build the future of finance, and innovation is at the heart of their strategy. Their goal? To become the AWS of finance, providing the technological backbone for a new era of financial services. To achieve this ambitious vision, SoFi has been investing heavily in cutting-edge technology. They acquired two key companies, Galileo and Technisys, to bolster their technological capabilities. Galileo provides the infrastructure for digital banking, while Technisys offers a cloud-based core banking platform. These strategic acquisitions have positioned SoFi as a force to be reckoned with in the fintech space. They now have the tools and expertise to develop and launch innovative financial products at an unprecedented pace. This agility gives them a significant edge in the rapidly evolving world of finance. But SoFi's commitment to innovation goes beyond just technology. They're also focused on creating a seamless and personalized customer experience. Their mobile app, for example, has been lauded for its user-friendliness and intuitive design, making it easy for anyone to manage their finances on the go. Navigating the risks, a look at the challenges. SoFi's journey hasn't been without its bumps in the road. While their growth story is undeniably impressive, it's crucial to acknowledge the risks and challenges that lie ahead. One significant concern is SoFi's reliance on personal loans. This segment makes up a substantial portion of their loan portfolio. While their credit quality has held up well so far, any economic downturn could lead to an increase in defaults, potentially impacting their profitability. Another challenge is the current macroeconomic environment. Inflation is stubbornly high and interest rates are on the rise. This uncertain economic backdrop could dampen consumer spending and borrowing, potentially impacting SoFi's loan growth in the near term. Furthermore, SoFi operates in a highly competitive landscape. They're not just going up against traditional banks anymore. They're also facing off against a slew of other fintech startups, all vying for a piece of the pie. This intense competition could put pressure on their margins and make it harder to attract new customers. Finally, regulatory scrutiny is always a factor in the financial services industry. As SoFi expands its offerings and grows its customer base, it's likely to attract more attention from regulators. Any new regulations or changes to existing ones could impact their business operations and profitability. The final verdict: buy, sell, or hold SoFi stock. So is SoFi Technologies a buy, sell, or hold? The answer, like most things in investing, is nuanced. On the one hand, SoFi has a lot going for it. They're a true innovator in the fintech space with a compelling vision for the future of finance. They're growing rapidly, expanding their product offerings, and attracting millions of users to their platform. On the other hand, risks remain. Their reliance on personal loans exposes them to economic downturns. Competition is fierce, and regulatory scrutiny is always a possibility. So where does that leave investors? If you're a long-term investor who believes in SoFi's vision and is comfortable with volatility, SoFi could be a buy. Their potential for growth is significant, and they're well-positioned to capitalize on the ongoing digital transformation of the financial services industry. However, if you're risk-averse or focused on short-term gains, a hold might be more appropriate. SoFi's stock is not without its risks, and it's likely to remain volatile in the near term. Ultimately, the decision of whether to buy, sell, or hold SoFi stock depends on your individual investment goals, risk tolerance, and time horizon. Do your own research, consider the factors outlined above, and make an informed decision that aligns with your overall investment strategy. Please share, like, and subscribe to our channel for more updates.